Hey there, traders. Welcome back to the Edge series. This series is where I go through and talk a little bit about the Edge that I'm using today. And today's video is all about order flow, but specifically how I use the footprint chart. Okay, just remember this video is for educational purposes only. Please take a look at the disclaimer. And I've said this a gazillion times. Please go back, look at the prior videos. You're not going to understand the context for this video unless you look at the other videos in the series. There's a whole series, there's a playlist, and check it out. And there's a link here that you can click on and go to. I've also talked a lot about this chart. If you've watched the other videos, you've already heard me go through this, but this is the framework I use. It's called NADRO. It stands for Narrative, Acceptance, Developing Value, Rhythm, and Order Flow. Order flow is the last thing that I look at. I just want to emphasize this again. I know I talked about it in the last video, but whereas I used to trade where order flow was it. That was my system. I traded order flow. I would bring up my DOM and I would look at Auction Vista and I would find entries and exits there. And I've really kind of flipped things. Now I use NADRO, which was developed by Merritt Black at Apteros Trading. And I have much better context for what's happening in the market. I have better places where I'm looking to trade. And then I just use order flow to help get me in as optimal level location as I possibly can get into. So it helps me to be more precise. It's not my decision factor taking a trade, though. And that's really important. It's a big change that I've made in my trading. These are the tools that I use. I use Cumulative Delta, Footprint, and Auction Vista. I already talked about Cumulative Delta last time. That gives me a pretty good idea of big macro picture of order flow and what's happening, and if I should expect absorption or aggressiveness. So you can take a look at that video. This one is about footprint. This is where I get really good fidelity of what's happening in the order flow. And I look for certain turn patterns. I'm going to explain that in a second. And then I'll talk about Auction Vista. I've been using Auction Vista a whole lot more in the last couple of months. And it's just a great tool. I love using Auction Vista. It helps me find some really great spots. Helps me to be patient for both entering and also exiting. I can hold a little bit longer using Auction Vista. So I'll talk more about that one too. And for those of you who use Bookmap, Auction Vista and Bookmap are very similar. So, you can take the same principles when I talk about it. Okay, what is footprint? Now, I'm not going to do a whole tutorial on footprint. Honestly, I don't know footprint that well. I'm not a master. I'm not a guru of the footprint chart. There's some probably really, really great videos out there. In fact, I'm almost a little embarrassed to kind of talk through how I use footprint because it is very rudimentary. It is very rudimentary. I'm just looking for some very specific patterns in the footprint charts. And I'll talk a little bit about that. But I do think it's worth just understanding what a footprint chart looks like, so that you kind of know what I'm looking for when I'm looking for some of these patterns. On the left-hand side, you have a normal candlestick. You're probably familiar with that. You've got a wick up high. That's your high. You've got your open and your close, and that makes the body of the candle. And then you've got your low, and so you got a wick down below, right? Well, you can see the same stuff on a footprint chart. The numbers inside just represent the trades that took place at that particular price when the quote unquote candle or footprint candle or the footprint bar was being developed. The green marker here indicates the open and close area. So it matches just what the candlestick would look like. If it's green, if it opened below the close, it's red, if it whatever color you want, but if it's red, red if it's open above the close. And you've got your high and your low, of course, which is just the extension of the footprint bar, right? So pretty easy concept. It kind of mirrors a candle, just a normal candle. You can configure footprint bars to look any way you want, and I know in Sierra chart you have utmost control over what this stuff on the inside looks like. Honestly, I don't use any of it. If you're looking for like real wisdom of how to get into the nitty gritty of footprint, I ain't the guy. Absolutely not the guy. So I'll show you what I'm talking about here as we go through my stuff. But this is the basics of footprint. If you want more, go find another video. All right, this is my setup. And so let me just kind of explain what this chart is. So first of all, my footprint charts always match my main trading charts. So on the ES, I use a 2000 volume chart. On CL, right now I'm using 500. I've been up to 1,000, but the volume's just been really weird. And then for NQ, I use about a 750 chart. So I'll have the same volume for this chart, this footprint chart, as my main chart. Okay, so that's really important because I'm actually looking for certain patterns in both. The other thing I have, okay, so this stuff here, these are my footprint bars, obviously, right here. You can see that as an example, this is a green bar, and that means that the bar closed above where it opened, and it's a full bar. This one has a little bit of a tail on it right here. You can see. Obviously, this is a down, bearish bar right here. Okay. And inside, I've got these different colors and stuff. I don't pay any attention at all. I could take them off and it wouldn't even matter. The only thing I care about, honestly, is when looking at the bars themselves, is I just want to know, is the bar red or is the bar green? And honestly, to keep this is pretty simple. So like I don't have to do a lot of thinking and kind of reading little tiny text and all that kind of stuff. But I'm sure someone has a way better way to do this than I do. The other thing that's on my chart I have these delta, kind of a delta histogram. And this is bar by bar, what was the delta addition or subtraction from the cumulative. So last time we talked about cumulative delta, this is just individual bar delta. So what this is telling me as an example on this bar right here is I had a bullish bar. Okay. So I had my open below my close, I closed above my open. Okay. And I had really good delta. I had 330 worth of delta. I had 330 more bullish volume than bearish volume, right? And so, that's pretty healthy. This one's pretty healthy too, 524 right here. And so this lets me see how strong the delta, the buyers or the sellers, how aggressive the buyers or sellers are on a bar by bar basis. Now, can I look at this on my cumulative delta chart? Absolutely. That's where I was saying, like, this is so basic. I can see all of this on my individual cumulative delta bars. I can see all of this if I just brought up a regular candlestick chart, and that's fine. What this footprint allows me to see, though, is it just allows me to see those two things together in a way that catches my eye faster. Okay, so honestly, I hope that's not a big letdown for everyone, but that's all this is. It's as simple of an approach that this actually is. I'm just looking at, what would normally be regular candlesticks and what would normally be an individual delta number associated with that. Okay. This does give me my cumulative delta. I don't really look at this very much. It's just nice to have. Sometimes you'll see on my screenshots, I've got another one, which is kind of average order per second or something like that. And that just kind of tells me, pace of the tape. I was experimenting with that. But this is just basically what my setup looks like. Okay, now, this is where, so how do I apply this? I am looking for 3 specific patterns. And I'm looking for those patterns not randomly, but specifically around the areas that I want to trade. And when I see those patterns come up, then I am ready to take a trade. Okay. So The patterns are, first of all, and very simple. I'm simple-minded, as you'll you'll learn. I'm very simple-minded. My high quality pattern, my HQ pattern. So let me tell you how to read this particular pattern. Okay, and I have it all drawn out just to make it simple. I actually have this diagram up on my wall. Okay. First of all, these are Heikin-Ashi bars. Okay. So if you don't use Heikin-Ashi, I mean, I don't know how important it necessarily is. I've just noticed these patterns with Heikin-Ashi. I'm sure, if I brought up candlesticks, I could probably kind of modify it as well. Not a really big deal. But for now, these are Heikin-Ashi bars. Okay. And what the notation is. So first of all, those are my Heikin-Ashi bars. This is an indication, the rule of the direction that the footprint bar needs to be. So in this case, if I want to go with a high quality pattern, if I want to go long, I need to have a footprint bar where it's a green footprint bar. Okay. And what's that telling me? All it's telling me is that a normal candlestick would have closed green. Heikin-Ashi is different. Okay, so as you guys learn a little bit about Heikin-Ashi, you can actually have a red Heikin-Ashi bar and a green candlestick. It takes some volume and other things into account. But this is really important that my footprint bar is green. And I want to see my delta positive, strongly positive if possible. Okay. So that's how you read it. So the arrow indicates the direction my footprint bar should be, and the block indicates what my delta should be for this particular pattern. Okay. And then this line right here, so this one right here, and then this one right here, these are my entry requirements. So what I'm saying here is that if I get this pattern, then I want to be entering when price moves above the top of this Heikin-Ashi bar right here. But I have limits. This is really important. So my limits are here. So 3 points on the ES, 10 points on the NQ, 20 points on CL. I can probably take that down to about 16 to 20, and then 20 points on YM. Okay. And so what I'm looking for is, if this were to, what I'm looking for is I'm looking for the distance to here. Okay. So if this is 3 points from here to here, I can take this trade as soon as it breaks down below here. Okay. Now, if it's not 3 points, let's say that, this bar right here, kind of goes down and this is 4 points. It's a big bar, right? Then what I would do is I'd place a limit order right here at 3. Okay. And my stop loss would be right here. Okay, so that's how I use kind of these entry notations here, just so you know. You'll see them on the other ones as well. So let's recap. What am I looking for in a high quality pattern? Well, I'm looking for some sort of Heikin-Ashi bar. Okay, now the worst case is if my Heikin-Ashi bar is red. But if I have a nice extension pattern down here and it's green, if this bar was green and this turned green and this was green, that's a really great signal. So no problem going into those. Okay. But I'm looking for some sort of Heikin-Ashi bar that extends below the prior bar. I want to make sure it goes below there. I don't want a 2-bar pattern on this one. This is a 1-bar pattern. And I want to see my footprint bar be green, and I want to see my delta on that bar be green as well. Okay, and then I can place a limit order, 1 tick above the high of this bar, as long as it's within these parameters right here. Okay, so that's what I'm looking for, and that's what a high quality pattern would look like. My experience with these patterns is they happen in really fast moving markets. So, when things are moving really quick, sometimes it's a little, hairy to, just place a limit order right below this. But a lot of times when it goes, it goes. Here's an example from June 10th, 2022. It may be a little bit hard to see, but apologize. But let's just, first of all, let me go back. I'm not going to do a full NADRO kind of review of this particular thing because I don't even have all my tools up here in this particular screenshot. But this was kind of my developing value area. VWAP is somewhere up here. Not quite sure. You can't even see it. And my other trend indicator was going like this. It's red, right? So we're definitely looking to go down on a bear bias. All right. Now the question is do you get in here? Do you get in here? Do you get in here? Well, these weren't quite to my area of interest, right? Maybe I could have gotten into these. Honestly, the footprint didn't actually support coming into these. You can actually see that in the footprint. So this footprint would have kept me out of these. But then the question is, well, what about these right here? Do you get in right here? Do you get in? What about getting in right here? Again, I'm looking for a test of this line right here. So when price comes up, the question is, when is the best time to enter, and how can I enter where I have contained stop loss? Okay, so that's where we get to the footprint chart over here. So if you look at this footprint chart, and I apologize, I can't line this up exactly, perfect, but let's just call this 1. Let's just call this 1, and let's call this 2, and let's call this 3. And I think what we have is we have 1, and we have 2, and then we have 3. I think that's probably how they line up. Okay. So notice on 1, what I have here is I have a pattern where I've got a bullish footprint bar and a really bullish delta bar. So that's a no-go. I'm not gonna short right there. Okay. And on 2, I have this kind of flat pattern right here. Nothing really popped up. It's kind of like a, you can almost say, hey, what if you went, short right below here? But, I still have a little bit of bluish. Can't really see that, but you still have a little bit of bluish delta right here. But, this flat part right here, that's subject to stop runs. Okay. So that's not really appealing. Well, notice right here, perfectly lined up to our developing value area, kind of my line that we're looking at. I have a nice kind of a top out bar and a little stop run right above this. So we got green, green, green. We come up here and then we actually close red, right? So this candlestick right here, or this bar would actually look, this is what the candle would look like right here. Okay, and then this would be red all through here. That's what this would look like. So that's good. Now what about my delta? Well, I got blue, 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 and now I've got red. Okay, so I'm interested in taking this particular trade. This is a high quality pattern. Now the problem is it's 3.5 points from the top. I put these numbers on just for my convenience to be able to see stuff quick. From the top to the bottom, it's 3.5 points. Okay, really my entry is probably right here. So what do? Well, you place a limit order right here where it's 3 points away. And what happens, this comes up and it tags this right at 3 points and then it drops. And you can't see the rest of this, but you can see here kind of drops. If this one didn't get you in, then this one would have gotten you in right here. And my risk is only 3 points. So that's why I kind of have that comeback rule. I call these, my comeback rules. If I breach and it's a little bit further away from my risk tolerance, then I can place a limit order and get back in. Okay. Let me just mention that really quickly. So breaching is hugely important. So in all of these patterns, kind of the pattern bars have to be breached by the subsequent bar. I'm not anticipating stuff. I have to have a breach. And so, in cases like this, I'm not going to anticipate, if this bar hadn't breached and it came up to here, I'm not getting in at 3. I'm waiting for it to breach and then come back to 3. So that's really important. I've gotten myself burned quite a bit by anticipating turns that end up never happening. All right. Okay, this is what I call a medium quality pattern. You can see my simplicity here. All right, medium quality. This is a 1 bar, another 1 bar pattern, and it's kind of like the high quality, but like there's some components that are missing, right? First of all, this line, this dotted line right here, this means or. So this is, you want to see this setup or this setup on your footprint, okay? So what I mean is, so you have a similar setup like your hike and ashy, just like your, like anything else. You're all going to have like a move down, and you're looking, when do I get back in, to go back up, right? So this is looking for a long trade. I'm looking for a buy here. Now, what do I need to have happen? I either need to have the footprint bar be green on this bar right here. So it needs to be green when it's coming down. And this is going to be red. Now, if this was green, right, then this isn't an MQ setup. This is an HQ setup, okay? But if I've got bearish delta, then this bar had better be green, okay? If it's not green, it's not a trade. Conversely, the footprint bar could be red. So, this is, my hike and ashy is red, my footprint bar is red. But if I have a lot of bear volume, bull volume come in, delta, then that's okay. That's okay too. Conversely, you have the inverse over here. So if you're looking to go short, okay, then I need to make sure that on this turn bar, okay, this is my turn bar, that I either have a red footprint bar with green delta, or I have a green footprint bar with a lot of red delta. And preferably this isn't a big green bar. Hopefully it's a smaller bar. Okay, maybe even close to a doji. So if I have these patterns, so these are less, kind of lower quality patterns, and it's the same idea. So my risk tolerance is from the top of the turn, the turn bar, and it's 3 points for ES, 10 points for NQ, et cetera, right? Usually with these, I'm placing a limit order. I'm waiting for the breach, and then I'm placing a limit order to get in. Okay, so here's an example. So I can't remember which one it was, 3 or 4. I think it's 4. Yeah, it is 4. I had to go back in my history. I take screenshots of most of my days, and I didn't have a screenshot for 3 or 5, but I did have one for 4 with all my footprint stuff. So here's a day where, okay, we're bearish. Okay, so I've got this developing value area. We want to be bearish below here. We want to be bearish below here, right? And so we're coming up. This is a valid trade right here, because this is one line in the sand. This is probably another valid trade, but really the price wants to test up to here. And you could get fooled and kind of get into here if you're not careful. This is such a beautiful trade right here. Just such a beautiful entry. So in this case, a lot of these might have, green bars. And this is an example where I'm not using hike and ashy, by the way. So this is an example where I'm actually using just regular bars. Okay. So just keep that in mind. For these later examples, I think I'm pulling just regular bars. So what does that look like though? What does a medium quality pattern look like? So again, we're looking at number 4. So in this case, what do we have? Well, we have a, kind of a bearish footprint bar, okay, which is good. So regardless of what that turn bar look like, whether it's hike and ashy or a regular bar, I need to see a bearish footprint bar, and I've got a bullish delta. Now, I don't like this. I don't like this delta right here. Okay, that's a lot of delta, 316. That's a lot of bull delta right there. This could probably keep me out of the trade or make me really wary of this trade, because this is a little bit sketch. This also means, because it's only 2 points, that my entry is a stop entry just below there. So as soon as this candle closes, I got to get in as soon as it breaches. Okay. And fortunately, this one worked out great. It was in a great location, right? But this kind of stuff does scare me when I look at these kind of big deltas. I was hoping that a delta, for something like this, I'd want to see delta much smaller, maybe something like that, right? Definitely smaller than the prior bar. But this is, it officially qualifies as kind of this medium quality pattern and is a good example to show you guys what this looks like. So, all right. This one is, I call it the NQHQ pattern. It's a 2-bar pattern, and it's a, not quality, like, it's almost like not a trade on the first bar, on the turn bar. Like the turn bar is absolutely, you would never place a trade there, but the second bar is kind of a higher quality pattern, right? And so what I mean by that, so if you take a look at this one, so this is no turn bar, right? This is absolutely no turn bar. This is just, it looks like continued downtrend. This is red, right? This is red. In order for this to be even medium quality, one of these needs to be green right here, and you don't have it. You have both of these as red, okay? But the next bar, I went from, a red footprint bar and a red, and negative delta to a green footprint bar and bull delta, and just in that turn. And this could be, as we've said, like this could be, kind of a doji type of Heiken Ashi bar, or it could be a green, obviously if this is green, it's going to be a green candle, right? And so, regardless of what this is, if, this 2-bar pattern shows up, then you have a potential trade. Now, here's how to trade this. These are going to work out to where I'm not trading below here I'm not putting my threshold below here. I'm actually putting my threshold below this bar. This is my turn bar. If you think about, if any of you trade supply and demand, you can think of this almost as, this is your demand bar, right? And over here, this is your supply bar going down. And so it makes sense. Like, this is the bar that, they're staking their position on. And so anything below that's probably going to fail. Okay. And this is a good rule because sometimes, this candle might actually start from right here, right? And then come up to here. And so your stop loss is actually right here versus all the way down to here. So it saves you a little bit in case this does turn and come down against you. Okay. And again, you get the picture. I think you can understand how it works over here on the bear side as well. So same idea where you're kind of all in one direction. Okay. We're all bullish. And then all of a sudden, whoosh, we have this, next bar. And notice this bar does not breach above this. Okay. That's a different pattern. That would be an HQ pattern, right? This bar it does not go above the high here or below the low over here on this one. Okay. So what does this look like in real life? Here's a couple trades, and we're going to look at trade number 1. Okay. So again, let's just, look at our structural or our context here. You can see very strongly negative here. This is our VWAP line right here. This is our VWAP developing value zone. But notice right here, I also have this line in the sand area. Okay, so when I have a line in the sand, I want to look for acceptance or breach below that. And we have that right here. I have this nice breach below. Okay, not so great that we're above this, but we also have this line in the sand. You guys don't see this, but remember I talked about RSI. I have these little indicators here. Let me know. I've kind of gone overbought on RSI. So this is a beautiful location, and the question is just how do I time this, right? And just going back to timing, when I talked about how do you time this? Like you can time this on a Heiken Ashi bar turn, but sometimes you lose. Like I feel like you lose some ticks on that. So this just gets you a little bit more precise entry, that 3-point entry. Sometimes you might be entering a 4, 5, 6 points on a Heiken Ashi turn because it takes a little bit of time for the bar to kind of print red on a turn like that. All right, so this is trade one. Obviously, I'm looking, how do I get into this? So we'll take a look at this area here. So notice a couple things. First of all, we have this nice bull volume here. So bulls are super active. Bulls are coming in. They're super active. Bulls are coming in. But notice like we have this decline in the delta. So we really kind of drop off delta here. And then we have a pattern. So we have our bullish bar here, footprint bar, and then we have our bearish footprint bar. Okay, so we have this pattern. Let me draw this correctly here. And we have also bearish delta following bullish delta. Okay, so we have our 2-bar pattern. Now, what am I looking for to get in? Well, I want to make sure that this gets breached right down here. And I'm looking for 3 points from here. I actually need to be a tick above here. So probably my entry is right around here. This comes down here. This bar somehow comes all the way up to here. Okay, and then we go down. Okay, and notice that we come all the way back up here, but we don't actually breach. Let me get a line on here. We don't actually breach above our stop loss here. It comes really close, comes right to the tick, right? So obviously that's kind of a scary one, right? Where it comes right up to there. But that's a good quality of this, kind of NQHQ pattern that's on here as well. Told you guys, super simple. All right, let's take a look at a couple other examples. So this is from kind of fairly recent, June 28th, 2022. We went and made this move down here, and it did two things. So first of all, we have this line in the sand here, and we have our developing value here. Okay, so what am I looking for? I'm looking for a pullback back into here, and then an opportunity. How do I get into that and access that trade to go down? Okay, so if we look at June 28th, so it's about 9:15, so it's about 45 minutes after the open. Okay, so notice what we have. If we can kind of zoom in here, we actually have a positive bar, bear bar, bull bar, right? And bull bar comes up, and actually kind of have this little stop run that happens right here, and then we shoot down. Okay, so what does my footprint tell me? Okay, you can actually see that little stop run. So right here, okay, so here we have a bull bar. Okay, here we have another bull bar, right? And unfortunately, like you look at this and think, oh, this almost made that NQ MQ. It didn't, because obviously, or NQHQ, because obviously this should have been red, and it should have breached lower. Should have breached lower than this here as well. So I would have wanted to see this bar be red right there, and this red, and then that would have been a good short entry below there, but that didn't happen. Okay, then I have this other bar pattern right here, and I kind of ignore this at this point because this was my main turn bar. Okay, I haven't really talked a lot about this, but because this was my swing high, my most recent swing high, that's my turn bar. And I'm really only looking for 1 or 2 bar patterns. I'm not looking for the third bar after this. Okay, not really. I have seen some patterns where this works out. Haven't really codified them into anything, and so maybe that's work I'll do. But for now, maximum 2 bar pattern for me on this. So what happens is we get this run up, this kind of stop run. This is that bull bar that we saw. We also have bull delta. So that's not a trade. I'm not looking to go below there, right? We have this that comes down. So we have a red bar here, and we have red delta. So now that has triggered the trade for me, okay? And what I want is I want 3 points from right there. So that's, probably somewhere around here, I guess. And that happens, really probably on this bar right here. I come up to here. My stop loss is still safe. And as you can see from the rest of this chart, we have this very nice move that keeps going down and down and down. So another good example of this popping in there. This is actually the second trade. So if we come back here and kind of take a look at this trade right here, again, we have, same thing. We're kind of coming down. We come down really hard and really fast. We're kind of hovering against these really extreme, locations here. And again, what I'm looking for is I'm hoping for kind of a move back into here to test this. This came really close right there. This was clearly, in hindsight, the move that you want to look for. But let's see what the footprint chart looks like. So that first kind of fake attempt, this is what we have right here. We have this bar here, and we have this bar here. Now, since this went one tick above the prior bar, you can kind of argue like this is an HQ type of trade, but I just don't see it that way. Like a one tick like this with overlapping bars for me, and when it goes 4.5 points, that is a no-go. I would have wanted this to come up a little bit higher, and I would have wanted the bar to look something a little bit more like this. Okay. A lot less narrow, really kind of get out of this kind of this, flat, range pattern, and really kind of poke up and take some liquidity above before going down. Okay. So I'm wary of these kinds of trades that happen in these kinds of, really tight channels. So, but what do we have later is we have this poke up above. So, we kind of came down, we kind of came up, beautiful pattern to kind of take out stop losses above. And then we have this nice high quality bar. So we have the no trade, no quality bar next to the high quality bar right here, right? So we have a bear footprint bar, and we got bearish delta. That means it's a go. So where are we trying to get into? We're trying to get into 3 points from here, which is probably something here. We got it at least on this bar right here, and our stop loss was never touched right up here, and we went on from there. Okay. So that's what that one looked like. So that's how I use footprint, and I'm sure I probably disappointed some people who wanted like some really, really great insight and knowledge and this wizardry around footprint. I am just such a creature of simplicity, and I would encourage you to go look at these patterns. Go look for yourself. I've seen them work on everything. I watch them work on NQ, CL, YM, everywhere. Now, I'm going to caution you, super important to make sure that you're trading with, an idea of acceptance and developing value and these other things. It works for me with all the narrative work and all the other stuff that I have, and I have these major areas that I'm looking at first, and then I'm looking for the pattern. I think I could find the pattern all over for stuff that would end up failing because I'm not using it against the narrative work, and so that's an area of caution. But yeah, I'd totally encourage you to go and check out these patterns and how these patterns, could actually work. And the reason they work is just fundamentals. I'm looking for when the other side is coming back in after a pullback. That's it. And that's all this is telling me. It's just giving me a little micro easy view of saying, hey, the bulls are coming back in, or the bears are starting to come back in. It's okay to get back in now. And that's it. And then it gives me a good idea of where I can set my risk parameters. And that's it. So, all right. Hope this was helpful. And we'll move on to the next video, which is Auction Vista. Until then, happy trading.